Good morning, everybody. Hey, welcome to Thursday, August 20th. As the week's winding down, we have unemployment numbers coming out today. That's going to be kind of an interesting topic to see what those numbers come out at. Hey, let me remind you before we get going with Dave here, tomorrow, Friday, August 21st, 11:30, we have Friday with Phillip. It's an opportunity you can come and bring your questions, concerns, and get some answers, as well as get some updates on what's happening in the economy and the market as a whole. I hope you'll join me tomorrow. All you have to do is go to my website, statlerfinancial.com. Under the events tab, there's a place you can register right there. Look forward to seeing you tomorrow as we get ready with our conversation with Dave.
Time, morning, Dave. It's 8:39 now, 21 before 9. Time to look in and see what's happening on finances. I'm always nervous on Thursdays when we're into times like these because we get the unemployment numbers in and how many people lost their jobs this week. Let's analyze them with the help of Phillip Statler from Statler Financial Services. Phillip, good morning. How are you today?
Good morning, Dave. How I'm doing? Well, trying to get all my computer stuff set up as you and I'm listening to you introduce everything. So, hey, but I'm back with you. Good. It's hard to believe that it's the 20th of August, and this week is almost over.
Yeah, it's 2/3 of the way through the 8th month of the year. I mean, it felt like during the shutdown, like 1 month took 3 months. Now that things are moving so fast, the time's going way too fast as summer progresses. We start the morning out with the weekly unemployment claims. First-time unemployment claims last week rose by a bit, up to 1.1 million new unemployment claims. And the big disappointment to that, even beyond the raw numbers, is the fact that the market expected considerably better, I gather.
Yeah, they did. They expected it to be kind of back where it was last week. They expected 883,000 to 920-some thousand, depending upon which economist you look at. And so, 1.1 is not what they expected. However, looking at the futures, originally it was not putting much pressure on them. They have digressed a little bit in the last 10 minutes.
Yeah, we're kind of herky-jerky up and down. We're recovering while you and I were talking before we went on the air, and then kind of turned the other direction. Maybe they're drilling down and looking at it a little bit because there was a little bit of good news at the very least. Continuing unemployment claims declined by 636,000 last week, which says at the very least, while we're putting more people out of work, kind of an aside to something you've been warning about for a long time, as the payroll protection loans run out, the governments run out of tax money and start doing furloughs and whatnot. We're seeing more unemployment claims being given, but in the private sector, we're putting some people back to work as well. 636,000 people stopped receiving unemployment claims last week. So, no, it doesn't balance out, but at the very least, there's some good news to be had in there.
Well, there is, and the question is going to be going forward, how does that balance really work out? How many people? Because I think if I do my math right, by the end of September, that's when all the PPP money will be out of the system. And so that will be the telling sign in the fourth quarter as to our businesses generating enough revenue to keep their employees busy and keep them on the payroll.
Exactly. And the telling blow is going to be when the number of new claims is smaller than the decrease in continuing claims. Then at the very least, we'll be making a gain in the process.
Well, that's true. And hopefully in the fourth quarter we'll see that. I'm not optimistic on that front, Dave. I think it's going to be next year before we see that kind of blend out.
I fear you could be right, even though I'm not happy with it. And you add a political year into it as well. It's in one party's interest to keep things tanked. It's in the other party's interest to juice them up. And, they meet in the middle and absolutely nothing gets done in Washington until we get past Election Day.
Yeah, and that's coming up here pretty quick. As we look, it'll be here before we know it.
Yep, and at this point in time, I'm kind of thinking it can't come fast enough. The other data dump that we got this morning, again, it's a decline, but still shows some positive progress. The Philly Fed Index, we always throw out these with the warning that every Federal Reserve bank does these things, and they all use different formulas, so it's the change and the positive versus negative that make the difference. Philly Fed Index is still positive at 17.2, but that's down 7 points from last month where they had 24.1. So growth, but it's definitely slowing a little bit as that PPP money runs out, and we start getting a little nervous about that last spike in coronavirus cases.
Yeah, well, and that's true, and that's going to continue, I think, until we probably get that issue resolved.
Absolutely. The other news item happened yesterday afternoon at 2 p.m., and if you watched the stock charts, you saw a big downtick about 2 p.m. That was because the Federal Reserve released their minutes of the last open market committee meeting. It was after the European markets closed and before the Asian markets opened up, so we got some real money reaction out of them this morning. But things went down. The Federal Reserve, basically in the minutes, everybody agreed that things are looking el stinko at the moment, that there's a lot of uncertainty based on what's going on with the virus, and they ruled out messing around with the bond market any more than they already are, which made the Europeans go, whoopsie, I think they're more worried about inflation than we are, don't you?
Well, yeah, and you know, I'm thinking that's a good sign. I think that they're not going to mess with bond rates anymore, or at least not right now. But I think, you know, yesterday the S&P 500 and I think the NASDAQ also hit some new record highs yesterday, intraday, but then started to fall off of that. There was one thing that was brought out within that report that was quoted in one of the articles I read, and it said the ongoing public health crisis would weigh heavy on economic activity, employment, and inflation in the near term. And I think that's probably what traders are looking at today or yesterday was near term, you know, because traders, they make their money day in and day out. And so that's important to them as to what's going to be looking at the economy in the short term.
And it showed at 2 p.m. because almost as soon as the minutes were released, the Standard & Poor's went down. Yeah, we were up for most of the day until 2 p.m. Then we took about a 0.5% downtick and kind of headed downward from that point onward through the day. Sounds like a major sell-off. It wasn't a major one, but it definitely was a change in direction.
Definitely, and it caught your attention because it was, you know, you could tell exactly pretty much when it happened.
Absolutely. When the Fed speaks, the charts on Wall Street always end up looking like a seismograph someplace. Like I said, the European markets were profoundly unimpressed, and so were the Asians. They're trading downward like a full percent this morning. A couple of our companies that we've heard of put out some quarterly reports as well. Is there any good news to be had this morning?
Hey, we got a little bit of both, Dave. We got BJ's Wholesale Company Club. They had a good quarter. They beat by 17 cents a share. Revenue obviously was above estimates, just like Costco and other stores. Their same store sales rose by 24%, not quite as good as some of the other retailers we've seen, but better than the 15% that was expected. And so today they are trading up about 3.4%. And they'll actually open, if they open right now, at a new 52-week high. The other one we have is Estee Lauder. They not so good. They lost about 19 cents more than expected in terms of their sales and their earnings per share. Revenue, though, was in line with what was forecasted. They basically launched some initiatives here to rebalance its investments. So they're reducing some of the retail footprint anyway, and trying to emphasize more digital sales. They have plans to cut up to 2,000 jobs globally. They kind of announced, and so they're trading down today 6.25%.
Yeah, they're kind of leading my loser list. My reaction when I saw that was, well, who in the heck wears makeup when you're working from home, right?
Exactly, or when you're wearing a mask, right?
Yeah, that too. I didn't think about that. Give me some makeup, people. That'll be the next best mousetrap. Makeup that doesn't wear off on the inside of a mask.
Mask, yeah. I think I got two for you. I got NVIDIA, which is the chip maker. They do well. They beat by about 21 cents a share today. They had a really strong quarter, and they expect this quarter to be good too. But some investors, when they dug down into everything, were disappointed with their data center business. Yes, it did not perform as well as expected, and so they're taking it on the chin right now. They actually closed down yesterday 1%. They're down another 0.8% this morning.
I didn't honestly know that NVIDIA was into cloud work. I figured that they were primarily just a video card maker.
Yeah, that's what I thought too. But evidently, they're like a lot of these companies are getting into that sector. The last one I have is an interesting is L Brands. You know, we talked about it. They tried to sell off their Victoria's Secret, and then all this happened, and it didn't go through. So they reported better than expected profits for the quarter. And it's coming from their Bath and Body Works business, right? They had strong sales in sanitizers and soaps and those type of things. And even Victoria's Secret's was a help. They saw a 28% jump in their online sales over the quarter. So, hey, you know, it's all good, right?
I was going to say, you don't need makeup, but you do work in your underwear, so I suppose that makes sense, doesn't it?
Well, you know, I think so, Dave. But they're trading up today 4%.
Oh, Lord, yeah, they're on the top of my big winner list. I figured something good had happened to them. I'm glad it was a report.
Actually, they'll actually open at a new 52-week high if they stay where they are right now.
Oh, cool. You start going up by 4 or 5%. That's good news. Resetting the table for the morning. I'm still chuckling over the notion of not wearing makeup but wearing fancy underwear. Yesterday, it was a red day on Wall Street. Dow lost 85 points. That's about 1/3%, which in today's world is not really a big move. NASDAQ was down 64. Standard & Poor's down 0.44%, a little under 15 points. It was a sell-off, but it was not a major one yesterday. 45 minutes before the real money gets thrown around, Phillip, what kind of indications have we got this morning?
Dave, let me just say that the indexes are all red. However, you know, they have improved in the last 25, 30 minutes here. The Dow is down about 1/3%, $97. The S&P 500 is down 0.4, a little over $13.50. And the NASDAQ's down a little less than 1/4%, which is about $26. So they have pared their losses a little bit this morning. Then we look at the commodities side. They're all red too. So, man, it is a red day today, Dave. The silver's down a little over 1/10%. Gold's down 1%. Crude oil, it's about where it was yesterday when you and I talked, but it's down about 9/10 from where it closed yesterday. It's at $42.74 a barrel.
Yeah, the folks that look at it in the afternoon are saying, oh, good, above 43, and it always drops back down below that by the time you and I talk in the morning, doesn't it?
Yeah, it seems to be. I know crude oil inventory came out late yesterday afternoon, and it was down a little bit, not much, but so is use again, you know. So, yeah, I think those two probably kind of balance each other out.
I got you. We're going to keep the red going when we look at the overseas markets. The Asian markets, evidently, everybody finally read the Federal Reserve and said, oh, gosh, the U.S. has problems. Big surprise. Japan and the Asian Rim markets all down by over 1% yesterday. Europe's kind of following suit midway through their day, seeing 1% and 1.5% on all the major indexes there as well. Phillip, this is probably one of those reasons why we talk about stability all the time. The Federal Reserve blinks, all of a sudden indexes start going crazy for a day. Stability counts for a lot when you're close to retirement. How do I find you to get that stability?
It does, Dave. And give us a call at 863-382-0037. Hey, we got Friday with Phillip tomorrow, 11:30. You can go to our website, statlerfinancial.com, and register there under the events tab. And then join us this weekend for the Statler Financial radio show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here one more time for the week tomorrow morning about the same time. Phillip, thank you so much, and we'll see you then, all right?
All right, man. You have a great day.
Thank you. Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Remember, tomorrow, 11:30, Friday with Phillip. It's a great opportunity for you to come, meet me, get some questions answered, and get a little bit of an update. So I look forward to that. Go to my website, statlerfinancial.com. Under the events tab, you can register there, get all the information to log on and join us for that meeting. Hey, take care. I look forward to speaking to you again tomorrow.